morning, everybody, and thank you for those very kind introductory remarks. And it's good to see everybody. Looking forward to seeing you in person, as you say, before too long. Look, I think the question, is it still right to invest, is a slightly peculiar one, given the tremendous underperformance of emerging markets against particularly the US market, but also Western markets over the course of the last decade. It actually hasn't been a great place. It's been a very challenging place to invest. And as a consequence, the kind of Western approach to passive investing, or index hugging as we call it, would not have worked for you in the emerging markets over the course of the last decade. You really had to go for on-the-ground expertise, deep primary research, and seek out those companies that were delivering the domestic growth, largely domestic growth, in countries like China, which have demonstrated over the course, particularly of this pandemic, how whatever the US throws at China, whatever one thinks about the growth trajectory and China's exposure to the global economy, has sufficient power in its domestic economy to continue to grow at an incredible pace. And I believe that it's absolutely right to be looking at emerging markets. Emerging markets tend to move in fits and starts. There are usually prolonged periods of outperformance followed by long periods of underperformance. And relative to the US, the S&P 500, for example, we haven't been at such a low point in terms of relative stock price for a decade. So it is really a very propitious time to be looking at emerging markets. The pace of inoculations in China is quite extraordinary. I can't remember how many hundreds of millions of people have been inoculated now, but it is a phenomenal achievement from the Chinese administration. And life is getting back to normal. In terms of your question about where I think the opportunities reside, in other parts of the world, Brazil, Africa, Russia, we are in the middle now of what I believe to be another commodity super cycle. Commodity prices are extremely strong, and they're driving the share prices of some of the key constituents of the indices in Brazil and Russia. Not only that, but countries like Russia, where the currency has been weak and the dividends are incredibly high, the total return from stock market performance and dividends will be impressive during the course of this year. But I'd like to come back to this issue of the new economy. I think the impetus behind what we call the low carbon economy or decarbonization will continue to drive stock price valuations. We were chatting in the green room about Yadi. I have to get the pronunciation right, Sophie, you've helped me with that. But this is an electric scooter manufacturing company which has battery charging technology, which is by far the best in the world. You can charge up your vehicle within an hour, and the sales of the vehicles is continuing at an incredibly rapid pace, as some of these brands that we haven't heard of in the West from China start to become more familiar to us, and they move into international markets from the domestic market. And the growth opportunities within China and within the rest of the world, we run a portfolio called Climate Impact Asia, which is actually a universe of about $1 trillion of market capitalization. The largest manufacturers of photovoltaic panels, the largest manufacturers of wind turbines, electric vehicles, battery storage, waste to energy. These are all very important areas where I see continued growth with a global narrative which is going to continue to compel international investors. I think that ESG has moved from being something of a fad or a differentiator to something now which people take very seriously. And of course, taking our Western values into the developing world, particularly into China and countries which no longer see themselves as the developing world, and imposing those values is a great challenge. China is already, as I've illustrated, a leader in terms of the E in ESG. And it's had to make it an imperative to make living in China and working in China and succeeding in China a reality. No one wants to live in countries that are old-fashioned industrialized nations which are polluted and so forth. So there have been very substantial changes, both in China and indeed in India, with pollution levels falling in the major cities very significantly. But what's really important, I think, is the nature of the evolution of a whole new asset class, seeking out companies in countries like China, which are driving what I called before decarbonization or the low carbon economy. And we were able to illustrate that we could deliver a very significant margin of outperformance from investing into what we call the low carbon economy universe. Those are companies which, by our definition, derive 50% of their revenues from the low carbon economy and include all those industries that I talked to you about before.